Welcome to Money Mavrick. Today we'll teach you the most important pattern to remember in trading. Don't forget to subscribe. Certainly. Here are additional candlestick patterns along with the revised script. Doji. A doji candlestick has a small body, indicating that the opening and closing prices are nearly equal. It represents market indecision and can signal a potential trend reversal or trend continuation, depending on the preceding price action. Hammer. The hammer pattern is characterized by a small body at the top and a long lower shadow. It often appears at the bottom of a downtrend and signifies a potential trend reversal to the upside. Shooting star. The shooting star pattern has a small body at the bottom and a long upper shadow. It typically appears at the top of an uptrend and suggests a possible trend reversal to the downside. Engulfing pattern. The engulfing pattern occurs when a small candlestick is followed by a larger candlestick that completely engulfs the previous one. A bullish engulfing pattern forms at the bottom of a downtrend and indicates a potential trend reversal to the upside. Conversely, a bearish engulfing pattern forms at the top of an uptrend and suggests a possible trend reversal to the downside. Morning star. The morning star pattern consists of 3 candlesticks. It starts with a long bearish candle, followed by a small bearish or bullish candle, and ends with a long bullish candle. This pattern indicates a potential reversal from a downtrend to an uptrend. Evening star. The evening star pattern is the opposite of the morning star pattern. It begins with a long bullish candle, followed by a small bearish or bullish candle, and ends with a long bearish candle. It suggests a potential reversal from an uptrend to a downtrend. Hanging man. The hanging man pattern resembles a hammer, but it appears at the top of an uptrend. It has a small body at the top and a long lower shadow. It indicates a possible trend reversal to the downside. Piercing pattern. The piercing pattern consists of a long bearish candle followed by a bullish candle that opens below the previous candle's low but closes above its midpoint. It suggests a potential trend reversal from a downtrend to an uptrend. Harami. The harami pattern occurs when a small candlestick is contained within the previous candle's body. A bullish harami forms during a downtrend and suggests a potential trend reversal to the upside. A bearish harami forms during an uptrend and indicates a possible trend reversal to the downside. 3 white soldiers. The 3 white soldiers pattern consists of 3 consecutive long bullish candlesticks with small or no shadows. It suggests a strong uptrend and indicates a potential continuation of the trend. 3 black crows. The 3 black crows pattern is the opposite of the 3 white soldiers. It features 3 consecutive long bearish candlesticks with small or no shadows. It suggests a strong downtrend and indicates a potential continuation of the trend. With these candlestick patterns in your toolkit, you can enhance your technical analysis skills and make more informed trading decisions. Remember to use them in conjunction with other indicators and tools for confirmation and practice thoroughly before applying them to live trading. Thank you for watching our video. You can join our Discord server. There's a link in description.